Hello, everybody. Hello, hello. Welcome to another Friday Live. I'm excited about this because we are going to be talking about something that I feel like I get asked almost on a daily basis. What is going on with the market? So we're going to dive into that. Is the market is it shifting? What do we have going on with our market? Not just in Arizona, but kind of nationally a little bit too. We're going to take a look at a couple articles, and I have a guest. I'm super excited. So I'm going to bring him in right now. His name is Joe. Hi, Joe. How are you?
John, I'm good. How are you?
I'm well, thank you. So Joe is in LA,
Yes.
kind of outside the LA area, and so he'll bring his kind of perspective in on what's going on over there. And then I know you, like I do, I have a lot of friends that sell real estate, not just where I live, but elsewhere. And we talk a lot.
Yes, we do.
Yeah. So
absolutely.
finding out kind of what's going on where is always a good thing because
Yeah.
people, I don't know about you, but for me, I've got people coming from a lot of different places. So it's good for me to kind of know what's going on elsewhere outside of kind of my little bubble that I'm in.
Yeah, absolutely. And you kind of hit the nail on the head. Like this is kind of like the $100 million question right now. If you're a real estate agent, like everyone is like, what's the market doing? I mean, That's always the normal go-to. Like, I don't know, Sean, I mean, how many times have you gone out with friends or family and someone's like, hey, Sean, how's the market? What's going on? I mean, even when things are like normal, right?
Right.
And so now it's even more amplified because we have, we hear about rates and inventory and insurance and natural disasters and all of these things that go into it. So yeah, it's a very hot topic that we get, and it is important to be aware of because especially like, my market, your market, we're in major areas. I have a lot of people that move from all over the place to come to Southern California, and it does help to, be aware of what's going on in different parts of the nation.
Right. It's funny. You were saying that you get asked that no matter what.
Yeah.
And it's kind of like, if you know a real estate agent, instead of asking how the weather is, you ask, how's the market? Like that's kind of the go-to.
Yep. Yeah. It does. Yeah. It doesn't matter like if it's good or bad or not. People are just like, oh, real estate, how's the market?
How's the market?
Okay, well,
how's the market? Exactly. So I forgot to say, I was remiss to say, if you're watching, I want to know where you're watching from. So make sure you put it in the comments because it's always interesting to see who is watching from where. So, with that, I think we're going to jump into this first article because it was really interesting. I thought, to kind of look at this. Yeah. We'll talk about it because I always love these articles with these big, powerful headlines. And then you read the article and then you get to the bottom and it like contradicts everything that it said at the beginning. So let's take a look at this.
Yeah, so, I love when you get that, when they go like, oh, housing market crashing. And then you get to the bottom, they're like, well, actually, really, it's not. And you're like, well,
really, it's okay. Right. And I'm not saying that this is going to be that in this article, but let's take a look. So this talks about where the housing market shift is happening the fastest right now. And I will say, I don't know about you, Joe, but I mean, I'm not saying that I am just, not seeing any shift, but I'm seeing a shift. It's not super negative, but there's a shift.
You're absolutely correct. And also too, I think we should take this a second before we really get into this. Obviously we're going to talk about like, national numbers, state averages, national averages. Still, everybody has to remember that real estate is hyper local. I mean, I'm seeing, shifts in cities that are only maybe 5 or 6 cities away from me. Mm-hmm. Either way. And my city is different than both of those.
100%.
And so right now it's really important, we're going to talk about these broad brushstrokes and these broad numbers, but it's really important to remember that, we're going to talk about something, I'm in a suburb of LA, you're in Phoenix, someone watching could be in Mississippi or Iowa, and it could be completely different to them. So yeah, just keep in mind that your local marketplace could be different. And we're just talking kind of about the big stuff.
Right. I'm going to put this up here. Hola, Sean, my favorite person in Tucson, Arizona. Is your market any better? I know. Roberto, I think that the Tucson market and the Phoenix market kind of follow the same trajectory. Tucson usually lags a little bit than outside of Phoenix just because of the location. Yeah, he says, is there a shift? But please clarify what kind of shift up or shift down. I think that what the shift is, and we talked about this, Roberto, the shift is just that it is not moving as fast. The demand is not the same. The houses, really good houses are still selling quickly. The houses that need a little bit of work take a little bit more time to sell. So you've got to be really, really, really cognizant of the price that you set on the house when you're trying to sell it. Because buyers are savvy.
Yeah.
They're savvy. They watch, they know. And so they're paying close attention to pricing.
Yep.
So I know Roberto, it's going to happen for you. I promise you, you'll get where you want to go. I know it. And this is the person I've spoken a couple times.
You hit the nail on the head there, Sean, when talking about how, good houses at good price, or, they're still selling quickly. Same here. Right. And it's interesting because I'm in a suburb of LA. I think we're getting a little bit more traction because as you go further away from LA, you get more affordable. So by comparison purposes, my little town of Claremont is much more affordable than just, 20 or 30 miles east of me. But I think you hit the nail on the head when you're saying, buyers are a little bit more picky. And that's what we're seeing. I think we're starting to see buyers that are not so eager to just jump the gun, get in a house, buy a house, get in, lock the rate, and start building equity. I think we're now seeing buyers that are just more price sensitive, more rate sensitive, and therefore they're just more product sensitive. They're more sensitive to the home that they're going to buy. So that's an excellent point, and that's a similar thing that I'm seeing here as well.
Yeah, I mean, I was out with a buyer earlier today, and we were looking around, and we were talking about price and location and the whole thing. And I said, all of that is going to be a determining factor, but the house, like, is it well maintained? Has it been updated? All of those things are coming into play too. I'm sorry if my voice sounds scratchy. My allergies are crazy, so excuse me. Sorry about that, everybody. Okay, so back to this article. Where is it shifting? So this article is written by Lance Lambert. So he used to be with Fortune magazine, and now he has his own thing called Resi Club. And so he says, when assessing home price momentum, it's important to monitor active listings and month supply. If active listings start to rapidly increase as homes remain on the market for longer periods, it may indicate potential future pricing weakness. Conversely, a rapid decline in active listings could suggest a market that is heating up. National average listings are on the rise, up 24.6% between January of 2024 and January 2025. This indicates that home buyers have gained some leverage in many parts of the country over the past year, with some markets even feeling like balanced or buyers markets on the ground. However, nationally, we're still below pre-pandemic active inventory levels, 25.3% below January 2019, and some resale markets still remain tight, but that's not the case anymore in many pockets of the Sunbelt and Mountain West. I heard you, Joe. Did you want to say something there?
No,
Okay.
You're good.
All right. I thought you were. So, yeah.
But that's just crazy. I think that, a 25% inventory increase in 1 year. And like, that's huge, right? Like, that's like a huge percentage increase. And you think, the market has to be completely different. But it's crazy to think that that's how low in inventory we were collectively.
So what do you remember during like the pandemic? Do you remember what your lowest inventory level was? The number?
Oh gosh. Yeah. It was under 2.5 months. I think it flirted between.
No, I mean like the actual number of homes that you had.
The actual number of homes that I don't know. It was still huge in my market because again, it's greater LA area.
Yeah.
But when we're working off of months inventory, I think we got to about like 2.3-ish months, which might as well be nothing because typically normal is 5 to 6 months, as we know. So, so it got really low to point. And this graph right here that you have on the screen, I think this is one of the most interesting single graphs I've seen regarding inventory over pre-pandemic, post-pandemic. This really paints a great picture of where we were before pandemic, where we were after pandemic, and where we are now. And it's encouraging, at least.
Right in the middle.
Yeah.
Pretty much. I mean, our inventory, I can tell you for the Phoenix area, which again is a big area.
Yeah.
When the number of homes that we had on the market at one time, when the market was absolutely crazy, was 4,500.
Wow.
That was it.
Wow.
And keep in mind, we became a megalopolis. Like, so LA is a megalopolis, right?
Yeah.
How many people? We are too.
Yeah.
So, I mean, we were under, I think we were like 0.4 months inventory or something like that. It was crazy.
And I know that Arizona as a whole, but specifically Phoenix was kind of like one of these like pandemic boomtowny, places similar to Austin, similar to places in like Boise, Idaho, and stuff like that. So I'm not surprised to hear that your inventory was that low, because I know that there were people from my area they're like, I can't afford to buy a house in California. It's too expensive. It's unaffordable. I can't find anything. I'm going elsewhere.
Right.
And so I'm not surprised to hear that.
No, it was absolutely crazy. Absolutely crazy. Okay. Sal, you ask, hi, Sean, what do you think about the proposed AZ legislation to control zoning instead of by voter referendum? I'm going to be honest, Sal, I don't know that I am super versed in that question. I don't know that I know enough to answer your question. I wish I did. If you give me a little bit more, I might be able to answer. But just off that question, I don't know that I don't know that I have enough information to answer. Sorry about that. Okay, so let's read on. So here's how the total January inventory active listings, according to Realtor.com, compared to recent historic levels. These are crazy numbers. So January in 2027, or I'm sorry, in 2017, 1,154,200 or 120. 2018, almost 1,050,000. 2019, 1,110,000. 2020, 951. 2021, 532. 2020, I'm sorry, that was 2021. 2022, 367. Oh, that year was so hard.
That was rough.
2023, 616,000. 2024, 665, and 2025, 829. That's active listings. That's so low. So it just goes to show, right? We've talked about this a couple times too, with how low we are in inventory kind of overall. And I've talked about this, I think on the last live, that there's this big, huge range of anywhere from 2.4 million to like 7.2 million homes that we're below like the norm. And I'm like, okay, well, that range is a little broad. I feel like the range that I've heard the most is somewhere around like 4.2, 4.5 million homes.
I've heard the same thing. It's on the lower end. I heard the same window, and I usually hear closer to like that. Yeah. Like that 3.5, 4 million number. That 7 was a shocker to me.
Me too. I was like 7. I've never heard it that high.
Yeah.
Yeah. Okay. So 1 year change in active housing inventory for sale shift between January 2024 and January 2025. So we'll just take a look at Arizona. So January, year over year change is 34.7%. So from January 2019 to January 2025, we're negative 7.7% active listings. So we'll look at California as a whole. Year over year change at 32.5. So from 2019 to 2025, you guys are less 31%, 31.5%.
We are still very hungover from the pandemic when it comes to inventory. I mean, the good news is that things are getting better, right? Like if you highlight one of those states, and you can see that the numbers are coming up as we move further away from, pandemic time. Right. So things are trending in the right direction, but still we had so little available that even these big increases, they're good increases, but it's still not like we have an overabundance of properties on the market, at least in most areas of the United States.
Right. Agreed.
And it's funny because all the crash bros will tell you like, there's really a ton of inventory and they're hiding it from everybody's hiding it. And it's like, well, just look at the data.
Well, here's the thing. So were you selling real estate when during the market crash, the real market crash in 2007, 2008?
No, I was not.
So I was. And we had that whole thing of shadow inventory.
Yes.
It's very reminiscent of that.
Yeah.
The shadow inventory that we have coming, more foreclosures that are coming.
Right.
More, once we were through that, there's going to be more foreclosures coming, and they never came.
No.
It's very, like, if you listen to them, I'm just like,
Yep. Yep.
Okay. So among the states with the biggest inventory jumps is Florida, a Resi Club well-documented. as Resi Club well documented. In Florida, the biggest inventory increases initially over the past 2 years were concentrated in sections of Southwest Florida, in particular in markets like Cape Coral, Punta Gorda, and Fort Myers, which were hard hit by Hurricane Ian in September 22. This combination of increased housing supply for sale, the damaged homes coming up for sale, coupled with the strained demand, the results of spiked home prices, spiked mortgage rates, higher insurance premiums, and higher HOAs translated into market softening across much of Southwest Florida. I will say that for any of the agents that I know that are in that Florida area, they're seeing it. And I've got 2 clients right now that are moving from Florida to Arizona that are getting their house sold and moving here because they're tired of the hurricanes and the insurance.
Yeah, I believe it. And well, also on top of like condo buildings just collapsing randomly that nobody wants to be a part of. But between, I know Punta Gorda has been absolutely just decimated. I mean, that area is an area that just I've been keeping an eye on because it was one of the areas that very early on showed signs of problems with inventory shooting up, prices still staying high, affected by Hurricane Ian. There's just Punta Gorda has a lot of uphill challenges right now, and it's not going to get much better. And it's probably only going to spread. And between the natural disasters and the home insurance costs, I completely get it. I read a story that was saying there was a gentleman who had his house paid off and he canceled his homeowner's insurance. And he said, I am going to put in like the highest rated storm windows I can. I'm going to get the best roof that I can. I'm going to get wind insurance, and then I'm going to get other individual policies, but I'm not getting like just general home insurance because it was going to cost him like $14,000 a year. And he was just like, I can't do that anymore. And I know that there's other people, unfortunately, that are in that situation. And if you have a mortgage, you can't just forget the insurance.
Well, and that's the thing. Like, I was talking about this with the fires in California.
Yeah.
And when the insurance companies dropped them, and then they were put on what's the insurance?
Fair plan.
The fair plan. But in California, the thing that stinks is that a lot of these people have homes that are higher than $3 million, and that's the max that the fair plan will pay out. Yeah,
correct. Especially the homes in the Palisades area.
Right.
I would be willing to bet that an extremely large majority are well over $3 million in that area. Not so much in the Altadena area. Altadena area is a much different type of neighborhood than the Palisades area. Sure. Altadena will get a little bit of help, but I know that the Palisades area was getting canceled left and right, and the California Fair Plan is only okay. Yeah. And certainly people are going to have a hard time replacing what they had if they're utilizing that coverage.
Yeah, for sure. All right, let's keep reading. So, however, the inventory increases in Florida now expands far beyond Southwest Florida. Markets like Jacksonville and Orlando are also above pre-pandemic levels, as are many coastal pockets along Florida's Atlantic Ocean. One reason being that Florida's condo market is dealing with the after effects of regulation based following the Surfside condo collapse in 2021. This is compounded by a slowdown in work from home migration to Florida and significant home insurance shocks. So this shows active housing inventory for sale compared to pre-pandemic levels, shifts between January 2019 to 2025. Yeah, so we're negative 7.5 or 7.7, and you're negative 31. So same.
Yeah, I mean, you can see just by looking at the map, there's hardly any positive numbers. I mean, Texas has 13, Florida 5, and is that my geography is being tested?
This one,
Colorado 2.
Yeah.
I mean, so only 3 states, 2 of which 5% or less have more inventory than pre-pandemic. And Sean, I'd like to get your opinion on this.
Yeah.
When you hear of a market that has now reached inventory levels that are higher than pre-pandemic, how do you view that? Do you view that as a negative or a positive? I
feel like it's neutral.
Yeah.
Honestly, I mean, because this is what I remember before the pandemic hit, is that we had inventory.
Yeah.
But it wasn't crazy high. It wasn't crazy low.
Yeah.
we were just kind of moving. It
Yeah,
wasn't
we call those
anything.
the good old days when things were normal and predictable.
Right.
It's funny because, you'll read some of these articles and I read one of these and again, we all know this is no secret now. We know the game of a headline. Everybody knows how headlines work, right? And one of these articles was like, multiple markets in the United States are above pre-pandemic inventory levels. Crash is coming. And you're like, okay, wait a minute. For the last 5 years, we've all been complaining that there's not enough homes. And then the moment that one market or two markets or three markets gets just a little above pre-pandemic inventory, they're like, oh, there's too much inventory now.
I know.
So like, which is it? Do we not have enough or do we have too much?
To that point, I mean, you really have to go back to supply and demand.
Yeah.
Because that will kind of dictate how quickly that market is kind of turning. Yeah. Right. So we could have above pre-pandemic levels in our inventory, but our demand could be really, really high as well. Yes. Guess what? The market's going to increase. Yep. Because there's movement. Yeah.
And that's kind of the beautiful part to the free open market and supply and demand is it will find its rhythm naturally. And it's just interesting. I love when you get these articles that are like, oh my God, inventory skyrockets in wherever. And you're like, well, again, that's just one place, right, in one area. Right. And by the way, haven't we been asking for more inventory for half a decade now?
Yeah. And I mean, I think that one of the things that people are kind of, at least this is one of the things that I think about when they start talking about all this inventory, because I remember before 2007, 2008. Yeah. I remember that. And I remember when the builders were starting to put a lot of homes on the market.
Yes.
And the inventory went crazy high.
It did.
Crazy high. And then the bottom fell out. And that's kind of where I go with some of this, sometimes this legislation that's going to allow home builders to build more homes more quickly, the whole thing. I've said, I don't think they're going to do it.
No, they won't. They won't, because
they will not get caught like that again.
No, exactly. You are 110% correct. And that's why we're seeing when builders now are building, at least this is what's going on in my area. I don't know so much about yours. You probably have much more new build than I do because where I am, there's just not a lot of space for new builds. So
what's interesting where I am, I'm in Scottsdale. We are the same as you. We do not have a lot of land for new build. However, the outskirts of Phoenix, right? That Phoenix metro area, that's where we have a lot of new construction.
Yeah. And so you really have to go out of LA County now for new construction. You have to kind of get into the outskirts, San Bernardino County, Riverside, that kind of area. And now what at least I'm seeing is now when builders build, they're building smaller developments, they're building smaller communities, and they are working their phases much harder. And you probably remember this. You probably go, oh, this community is going to be 100 homes, and we're going to do it in 3 phases. So we're going to do roughly 33 homes a phase.
Yeah.
And now they're like, we're building 40 homes, and we're going to do 5 phases.
Yeah.
And they're just parceling out the releases so that they can manage their inventory better, which, I got to be honest, makes a lot of sense if you're a builder. Makes a lot of sense. And that's why I think you're correct. If we allow builders to build more or quicker, I don't know if they necessarily will.
I don't think they will. I really don't. So Jai, this is another agent here in the Valley. Her name's Jackie. She's a friend of mine. So too much tech here and coming. No crash here. I agree, Jackie. What'd she say? In 2008, we had 56,000 listings. This is something that I talk about all the time when people are like, oh my gosh, there's all this inventory. I'm like, wait, let me give you perspective, right? We have about 22 to 23,000 homes on the market right now, currently. When the market was crashing, we had 58,000.
Yeah, a little bit of a difference, just small.
Just a little bit of difference, right?
Well, and that's what I talk about. Like, it's really important to keep in mind the numbers, because if you just look at the percents, you're going to see a huge increase in inventory. But we came from such a low spot, a 25% increase looks huge, but in reality, it's like going from $1 to $4, right? And you're not going from $4 to $400. So you just got to keep that in mind. But of course, again, the crash bros don't like to do that.
They don't. They really like to shove that crash right in your face.
Yep.
All right, let's look back at this article. Okay, so in December of 2024, 9 states were back above pre-pandemic inventory levels: Arizona, Colorado, Florida, Idaho, Oklahoma, Tennessee, Texas, Utah, and Washington. In January 2025, just 3 states are above pre-pandemic levels: Colorado, Florida, and Texas. Yeah, so we fell back down.
That's interesting.
But for the reason the figure shrank isn't that inventory growth after accounting for seasonality. It has stalled. Instead, it's due to a denominator effect. Since inventory shrank over the course of 2019, January 2019 had a higher comparable denominator than December of 2019 had a lower one. That felt confusing to me.
They're basically saying what I was saying. They're just saying the reason the difference is so big is because of the starting point.
Right. I know. Just when you're reading, I was like, anyway, just me being me, So, all right. So here's Arizona. Again, it's showing you the same numbers, but we're below pre-pandemic's 2019 inventory. And I think here's California right here.
Yep. And this is a really good graphical representation of how many states are still a good ways below pre-pandemic inventory, because the lower they are on that chart, the further away they are from pre-pandemic 2019 inventory. And you can still see that it is a majority of the United States is still far below in inventory, which again, when we have inventory issues, it's really difficult to have major value drops or a crash.
Right. I agree. I mean, again, we go back to the supply and demand.
Yep.
So this goes on to say, why are Sunbelt and Mountain West markets seeing a faster return to pre-pandemic inventory levels than many Midwest or Northwest markets? One factor is that some pockets of the Sunbelt and Mountain West experienced even greater home price growth during the pandemic housing boom, which stretched costs too far beyond local incomes. Once pandemic fueled migration slowed and rates spiked, it became an issue in places like Colorado Springs and Austin. Unlike many Sunbelt housing markets, many Northeast and Midwest markets have lower levels of home building. As new supply becomes available in Southwest and Southeast markets, and builders use affordability adjustments like buy downs to move in, it has created a cooling effect in the resale market. The Northeast and Midwest don't have the same levels of new supply, so resale/existing homes are pretty much the only game in town. The big picture. Over the past few years, we've observed a softening across many housing markets as strained affordability tempers the fervors of a market that was unsustainably hot during the pandemic housing boom. While home prices are falling in some areas around the Gulf, most regional housing markets are still seeing positive year-over-year home price growth. The big question going forward is whether active inventory and months of supply will continue to rise and cause more housing markets to see outright price declines. And this is where we just talked about with the supply and demand. I think that it goes back to, yes, our inventory has risen. I think that's a good thing.
Yeah, as do I. I would agree.
I think that's a good thing. And now I think what we're dealing with high interest rates. I say that, higher interest rates.
Yeah.
Because we are never going to see 2.5% to 3% again, at least not for a very long time.
No.
So we have to get back to 6.5% to 7% might be the norm for a while, and that does affect demand. And I think until people kind of go, I'm tired of waiting, I'm ready to go, I think we're going to just kind of see just this kind of slug along.
I think you're exactly right. And originally, I agree 100% with what you said. I think it is going to be, the housing market is ginormous, and it's hard to, it's like trying to move a cruise ship quickly. You just can't. You can't turn the rudder and just make a right turn real quick. Like, it just doesn't work that way. And the housing market is a behemoth, and it's very complex. And when it gets in trouble, it's hard to get it out of trouble because it's big and bulky. So I think that I think you're right. I think that we're going to continue to kind of just see slow movement going in a more normal, positive direction, a more balanced direction overall. When all this kind of first started back in 2020 and 21 and 22, and it was very apparent very quickly that we had a big inventory crisis. And anybody, and we both did videos on this, Sean. You and I both did videos on this.
Okay.
And if you looked at the way that we were building homes prior to the great financial collapse and then post great financial collapse, it is literally night and day.
Yeah.
I mean, we went from building homes way up here to building homes way down here, and we just barely got there. And so it's very clear that we have an inventory issue. And the only way to fix that is to have more inventory. And unfortunately, houses are slow to be built. You can't just crank up the speed on the assembly line or hire more people in your factory to produce more units. It's much more complicated. So when I made that connection back in about 2022, 23, I kind of developed a hypothesis to me that kind of seemed like we're probably not going to see a normal real estate market probably until the early 2030s, in my opinion. I don't think we're going to see a pre-pandemic market in terms of affordability, rates, and price to income ratios as you know, until unfortunately early 2030s. It's just going to take some time. That's my opinion.
Yeah. I think it'll be interesting. I want to share this. This is something that if people watch my channel, I use this a lot. We're lucky here in Arizona. We've got it's something called the Cromford Report, and they analyze the market every single day. They give us so much data that every time I'm talking to another agent, they're like, what's your month's inventory to determine, are we in a buyer's market or seller's market? I'm like, I don't look at that because we have so much other great data. And so I'm going to share this with you because this shows where our market is, and it shows what our inventory is and what our demand is, or what our supply is and what our demand is. So I'll share. So anything under 90 is a buyer's market. Between 90 and 110, we're in a balanced market. Anything above 110, and we are in a seller's market. So you can see we are technically in a buyer's market.
Wow.
Our demand is in the red, so we're not even balanced in our demand, and our supply is a little high. And I say that our supply is a little high based on what our demand is, right? Our demand would be good if our supply would be good if our demand was a little bit higher.
Yeah. So
it's all relative, and this is adjusted seasonally. So this moves very slowly, but it does move. So it's something that I look at all the time. And then we also have the contract ratio that shows how quickly homes are being absorbed into the market. And so that will show a lot faster kind of where our market's going. So these are some of the things that I look at all the time in our market to help me understand, like, okay, what is going on? Where are we moving? The interesting thing about our market, we were in a buyer's market probably 3 weeks ago. We sat there for about 6 weeks. We popped into a normal market, or into a balanced market, kind of went into a small little seller's market, and now we're back. So we move a lot.
Interesting.
A lot.
And so do you see a big difference? Obviously, I know when we talk about like Phoenix, like you said, I have some familiar with the area. Phoenix is a big area. It's not just Phoenix. There's all sorts of different, Scottsdale and this and that and the other. And do you see that there is major noticeable differences between each of those pockets that make up like the valley?
Funny that you ask. So here's that chart that breaks down the cities. So this tells you what the Cromford Market Index is for the major cities, right? These are the top 17 cities. Yep. So Chandler is at 152. So Chandler's still in a seller's market, but they've lost 3% in the last month. Tempe is still in a seller's market. Scottsdale's still in a seller's market. Gilbert, Paradise Valley, Fountain Hills, Phoenix, Mesa, Glendale, Cave Creek, Avondale. Then we start getting down here: Peoria, Goodyear, Queen Creek, Surprise, Buckeye, Maricopa. So all of these last cities right here, they're all on the outskirts with new construction.
Interesting. Yeah. And the new construction probably is going to lower that index because there's more supply because they can build new construction.
A little bit, but this is just looking at resale. So what this is doing is it's showing you that the resale and the people are more apt to go and buy a new home for a couple of reasons. One, it's new and it's pretty and everybody likes that. And two, when you go to a new home builder, they're offering incentives with rate buy downs and other ways for you to get. So that is having a big effect on resale in some of these outlying cities.
Yeah, that makes sense. That makes a lot of sense.
So that's why it's like I show the big graph to say, look, overall, Phoenix is in a buyer's market, but now you have to drill down and we have to see, where are we really? In the city you're looking in, what does it look like? And this is what it looks like as of February 6th, which was yesterday.
Yeah, that's interesting.
Yeah, I love this data. I kind of geek out on it.
Yeah, no, this is good.
Yeah. So, I mean, because It's hard when somebody's saying, yeah, well, I hear on the news, I'll get people call. I hear that your inventory is really high. So your market must be, it's softening. Prices are coming down. I'm like, well, where are we talking?
Right. And that's why we're seeing
different.
Yeah. And that's why we're seeing kind of in my area, it's like, yeah, inventory is coming up, but it's being absorbed relatively quickly. Again, unless it's an erroneous listing, if someone has overpriced, it's an overpriced turkey, or it's got severe location challenges,
right.
severe condition challenges, something extreme.
Right.
But for the most part, if it's a decent home and if it's marketed well and priced well, it goes very quickly. So I hear that from people. Oh, I hear inventory is going up, our price is going down. No, now we have this interesting thing in my area where inventory is going up, price is still going up.
Right. Well, because it's absorption.
Because the demand is there.
Right.
The demand is there.
Exactly. And that's the whole thing. That's with this, we look at the contract ratio, like how quickly are the homes being absorbed into the market? If they're being absorbed quickly into the market, our demand is high, which is going to just push prices higher.
Exactly. And this just goes back to why it's so important that whatever real estate you're looking at, you have to keep that hyper local, view on, because that graph that you just showed perfectly demonstrated. You have multiple major cities all around Phoenix that are all, more or less, I hope I don't get crucified by people, more or less the same, right? There's not like significant differences between those cities, but there's still intricacies in the data and what happens in those cities. It's interesting.
Well, and what it is oftentimes, right, it's the job markets and it's the job corridors. And that is what we're seeing. Like, that is why Chandler right here at the top, Chandler has Intel.
Oh,
that is where Intel is.
Okay. That makes a lot of sense, because I was surprised to see Chandler at the top of the list.
Yeah. And all that. And so there's a bunch of people that have been going into Chandler because they're working at Intel. Huge.
Yeah, that makes sense.
And Chandler has been at the top for, I think, Jackie, if you're still listening, you can correct me. I think Chandler's been at the top for like 3 or 4 years.
Wow.
Yeah, because Intel is so big.
Yeah. And the push with the CHIPS Act and all that stuff and trying to, that makes a ton of sense.
I will tell you that Peoria, what number is Peoria?
12, it looks like.
12, that is going to change.
You think it's going to go up?
That's where Taiwan Semiconductor is being built right now. Well, it's already done.
Yes. But, I remember that my brother lives in Prescott, and he was telling me, he was like, man, the semiconductor companies come in and we're seeing a lot of people come here, and he's like, it's going to get crazy. Yeah. That's a good thing to know.
Yeah. 3 years. Thank you, Jackie. I knew you would help me out with that one. So that whole area out in Peoria is going to change drastically. There's home builders that have already bought land out there. There's a bunch of stuff. The 303 was then all the way connected. And so it's just an easier way to get to the 10 to get to LA makes it huge.
Yeah.
Yeah. Jackie says she lives in Peoria and it's starting to change now. I know it. I've been out there lately with some clients, and it is changing drastically.
And you say you're changing, you just mean more building, more new builds, more expansion.
Yeah. Because there's like South Peoria, which has been there for a while, and then there's North Peoria, and that is up where the Taiwan Semiconductor plant is going, and that is where it's just there's a lot of raw land out there. It's just going to explode.
So potentially, an up and coming market for those that are looking for a potential, equity increase in a shorter period of time. If someone's looking to maybe diversify their portfolio and add some more real estate.
When I talk to buyers and they're like, well, maybe Peoria, I'm like, I think there's opportunity in Peoria. I'm thinking,
that's good to know.
Yeah. North new builds selling quickly now. I know. I agree. They are.
I'm gonna have to put Peoria on my research list.
I would. It's crazy. The thing is that it's like if you look at Peoria as a whole, right?
Yeah.
You have to kind of take out South Peoria only because that's been there for a long, long time.
Makes sense.
Peoria is a little bit like Scottsdale. It's really kind of long. But that northern Peoria area, like kind of right on the outside of the 303, kind of, all out there, it's all brand new. It is, I'm telling you, in the next like 3 years, it's going to change because there's so many ancillary companies that are coming out into Peoria that are going to support Taiwan Semiconductor. So we're going to have a whole nother employment corridor. There's a ton of infrastructure going. There's talk about a potential another airport going there.
Wow.
It's going to change. Yeah, it's going to change drastically.
Well, and like you said, so there's all the support for the major anchor business, right?
Yeah.
But okay, so the major anchor business brings people, and then okay, so now we have a ton of people. Well, now we need schools and hospitals and restaurants and car washes and gas stations.
The Costco's already come, so they've got that down.
So in Peoria, in this north end of Peoria that we're kind of discussing right now, if someone was like, "Hey, Sean, I just I want a 3-bed, 2-bath house. I don't care if it's new. I don't care if it's resale. It's 1,800 square feet. Not too picky. What do I need to be prepared to spend in North Peoria to get a home like that today?"
You're in the newer areas, you're probably spending anywhere between $500,000 and $700,000.
Wow. Okay. So not like amazing affordability there. I mean, it still is a decent price in that area. Okay. Interesting.
Okay, so Jackie, you're telling me 5 to 6. I was out there with a client not long ago, and in that range, we were anywhere between like 5 and 7. But yeah.
And do they mostly have new builds, or is there a good mix of new builds and resale?
So there's a mix for sure, but there's so much coming that there are some new builds. There are some new builds that are out there, but there's one 700 easy. Yeah. So there's a bigger community called Vistancia that's out there. And they have been around for a long, long time. And there's a portion of the Vistancia that is Trilogy of Vistancia, which is kind of a great thing because that's the 55 plus part of that. And then there's more parts of Vistancia. So there's parts of Vistancia that have been there for a while, even besides this Trilogy piece. But then backing up towards the mountains, they're building even more. Wow. So you could be anywhere from the early 2000s to now. And
it's still the same community, technically.
Yeah.
Wow.
Yeah. They've got Vistancia, they've got North Point at Vistancia. It just kind of keeps going. And then because that takes you up closer to like Lake Pleasant. And then there's another big community that's coming out that's closer to Lake Pleasant. So yeah, there's a lot of new construction. And then I think it was DR Horton has purchased like a big chunk of land out there. Wow. So there's even more the whole thing's going to change.
Oh, it sounds like your friend Jackie is going to be really busy for the next
I know.
Good for Jackie.
I know. I'm happy for her. So, okay. So there was another article. Oop. I'll make sure that I didn't. Okay. I thought I froze there for a second. So there was another article that I thought was pretty interesting. We'll talk about that as we started talking about, of course, these markets are, dying. Now here's 5 housing market trends to keep an eye on. Oh, wait, I think I might have pulled the wrong one. Hold on. Please hold. No, I think that's it. Yeah. Where was the part that I thought was interesting? Yeah. Okay. So while housing prices will keep rising, it won't get too crazy. So housing prices are increasing slower than the sharp jumps we've seen previously. After the pandemic-driven housing boom, the market is beginning to cool down. Home values are increasing moderately and sustainability in many areas, unlike the double-digit annual increases that characterized the pandemic era. Several factors contribute to this slowdown. First, higher mortgage rates have dampened buyer demand, as monthly payments for new buyers are becoming increasingly unaffordable for many. Second, inflationary pressure and concerns about the potential economic downturn have made both buyers and sellers more cautious. Although prices remain high compared to historical norms, the rate of increase aligns more closely with long-term trends, creating a more balanced market environment, which is exactly what we just talked about.
Yeah.
I think that what we're going to see is just kind of a slow burn.
Yeah, I agree with you 100%. And I will say that I think that's what we're going to see. And that's what we need to see. I always get really suspicious whenever there's an issue and it's like, oh no, we've got a quick fix for that. And you're like, we do, like there's no quick fix for inflation. There's just only so much we can do. And, the interest rate thing is just so complicated. I mean, I get people all the time. They're like, Joe, what are interest rates doing? And I just gave up. I just gave up trying to tell them anything. I just said, just go look at Mortgage News Daily.
Right.
That's the best way. Who knows? Because now, the connection between, bond market and stocks and mortgage rates and the Fed rate, it doesn't seem to be as connected as they historically have been. I mean, for the first time ever since I've been doing real estate, which has been 11 years, we saw the federal funds rate go down and the mortgage interest rate go up.
Well, I feel like that's what's happened the last few times that they decrease it.
Yep.
They increase it. It's just bouncing all over.
Yeah, it's crazy. So, everybody wants to, talk about how's the market, how's interest rates. Those are the two, right?
Right.
And I'm like, okay, the first one we could talk about a little bit. I get that one. The second one, you got to talk to Jerome about that because there's nothing. Who knows?
Right. OG Ray-Bans. I'm late. What I miss? Oh, so much.
All the good stuff.
For being here.
You missed all the good stuff.
Thanks for coming. Stay here. We'll keep talking. Don't worry. All right. So back in here. So 2025 won't do us any favors on mortgage rates is what we're talking about. So mortgage rates are vital in shaping the current housing market. During the pandemic, historically low interest rates sparked a sales frenzy and consisting mostly of existing home sales. The Federal Reserve's actions to combat inflation through the rate hikes caused a 30-year mortgage rate to more than double, now hovering around 7%. Elevated mortgage rates slashed housing affordability as potential buyers encountered higher borrowing costs and limited inventory kept prices higher. Potential sellers who secured lower mortgage rates during the pandemic may hesitate to list their homes, resulting in tight supply of move-up properties. This mindset created a situation where homeowners feel locked in with their current properties, which limits turnover and contributes to less new housing listings. Unfortunately, 2025 will likely mirror this trend as mortgage rates are unlikely to drop. Strong economic conditions don't foster an environment for lower mortgage rates. I agree.
Yep.
So good news. There will be a modest increase in home sales. Home sales saw modest monthly gains despite challenging mortgage rates. However, they remain below historic norms. This stems from several factors. On one hand, there is considerable demand from buyers willing to pay premium for good homes in desirable locations. However, declining affordability, inflation, and economic uncertainty are making buyers hesitant to make significant financial commitments. Moreover, inventory still remains limited in some markets, as all real estate is local. Potential homebuyers waited 3 years for mortgage rates to drop, yet their lives continue to move forward. Last fall's rise in sales show a waning desire to stay inactive. The gradual influx of new listings provide buyers with more options, which were significantly lacking a few years ago. So that is one of the things I think that, oh, sorry, I'm reading and it's not on the screen. Sorry, everybody. That's one of the things I think that we keep talking about too, is that there are sellers out there that really would like to sell, but they're not going to.
Yeah.
And I feel like some of those homes are the homes that have been remodeled. Those are the ones that did a big remodel during the pandemic, and they maybe took some money out because of got a home equity line of credit, or they refinanced, took some cash, did a cash out refi, got some of that cash and did it with a really, really low interest rate. And so they're just like, you know what, I'm just not going to go anywhere right now.
Yeah, absolutely. And I think that trend is probably going to continue. I think people are going to look at the, cost benefit of, hey, we have this home that we like, but we would really like that home.
Yeah.
Oh gosh, it's that much more expensive. It's going to cost us how much more? Or the taxes are going to be how much? And they go, you know what? Let's just put 250 grand into the home that we have. Let's just put 200 grand into the home that we have, add on, build the pool, remodel the kitchen, whatever they're going to do. I think that more people are going to modify their home in order to make it work for them, as opposed to just saying, you know what, it's easier to go buy something new, because now it's not easier to just go out and buy something. Now it's really hard to just go out and buy something. So I think that trend will continue.
So OG Ray-Bans, I'm still planning on moving there from Denver. My girlfriend can't make up her mind yet. Well, bring her here right now, because the weather's perfect.
That's true. It's a good time to go to Arizona.
It is a great time to come to Arizona. The weather's perfect. I think that we're going to see some stagnation in listings, and some people just kind of hanging out and waiting. But I was talking to somebody today when I was out with my client, and when my husband and I bought our first house, our mortgage rate was 7%. And my father-in-law was just like, lock that rate. You're never going to see rates that low again. Yep. So you do have to put it into some perspective. It's just hard to put it into perspective coming off of 2.7, 3%, 4% mortgage rates with home prices that were a little bit lower.
Yep.
The good thing that makes California and Arizona different is the taxes, because I know in California, you buy a house at 500 and you sell it at $1 million, the taxes jump. That doesn't happen here.
Yeah. Yeah. So that is one of the hard things. And that's one of the things that limits people from moving, is because they're looking at the increase that they will have in taxes. Now, I will say that if you're over the age of 55, that does not apply. So
Right.
there is a little bit of room for that. And when you're in the home, so California has really good tax law if you're over 55 or if you haven't moved, because our property taxes here can only go up a maximum of 2% per year. So basically year over year, you're basically paying just a little bit more. It's not even a noticeable amount,
Mm-hmm.
you know? So that's nice. But when you move and the market's done well, you get absolutely destroyed. And you can go from paying a very reasonable amount in taxes to a very exorbitant amount of taxes very quickly. Now, how do they do it in Arizona?
So ours are all on assessed value, and they don't reassess when you sell the house. It just stays at the assessed value. So it'll climb up, it'll change over time, but it doesn't like do this automatic reset at the new market sales price.
So does the state at any point ever come and say, hey, we're gonna revalue or reassess? Or
they do a reassessment all the time. Like they'll do a reassessment kind of almost yearly. But so like I get a new tax statement every single year on my house. And so it'll tell me what they've assessed the taxes at. But it's not, when you sell your house, your new tax assessment doesn't jump to what that market value is. So our taxes are not assessed on market value. They're assessed on assessed value.
Interesting.
And so our assessed value is always lower than what the market value is outside of one condition. And that was when the market crashed and all these home prices were way up here. And then the market crashed. We lost 50% of our home value. And now everybody's taxes were way too high. And I know a bunch of people that then went in and they fought their tax bill and they won.
Yeah, that makes sense. Yeah, that makes sense.
Yeah.
And I think we could see a similar thing here if values do go down, which I don't know if they will, but it's hard because again, there's every city and county is just so unique here. But I have a feeling a similar thing could happen if we do see any meaningful price declines. I could see people wanting to challenge their property taxes because, here houses are expensive. Well, and they're off of the market price when it's transferred. So a lot of people are paying taxes on $800,000, $900,000 homes, $1 million homes, $1.2 million homes. That's very normal. And here in California, if you have $1 million home, it's roughly $1,000 a month. So, that's not a small amount of money. And imagine if you bought $1 million home in 2023 or 2024, and then, all of a sudden in 4 years, it's worth $875. You're going to want to try to get that difference in taxes, right? So I can see something like that potentially happening in some areas in my location, but we'll just have to see. Right.
I know, it's crazy. You're going to try to set something up. Good. I'm telling you, the weather's beautiful right now. So if anybody's out there, not in Arizona, you should be here. The Phoenix Open's going on right now. If you watch this later, it probably is not, but it's crazy. The weather's perfect. Unlike last year when it was pouring rain.
Yep.
And everyone was going crazy. So
I know we were right there with you.
Oh man. Yeah. No. The weather is beautiful right now. That is the benefit of Arizona. We love it. Well, Joe, thank you so much.
Yeah.
Thank you.
You're
Enjoyed
welcome.
it always.
Yeah.
All in all, I think that our predictions for the year is that it's going to be pretty stagnant. I just don't see a lot of movement happening.
No. I kind of see more of the same, just more of the same.
Yeah, I do as well. Perfect. Well, I am going to put Joe's contact information down below. If you guys need anybody over in Claremont, give him a call. He also has a YouTube channel. Look him up. And I thank you all for coming and watching and joining in. I love it when you guys have questions and comments. It always is helpful. Yeah. So thanks, and I'll see you again next week. Bye, everyone.